Powell must have come out and said something, or maybe they had an emergency meeting.
Well, they were talking about that, so we'll let the gang in here as this craziness is going on.
Yeah, it's insane. Anything new? G7 countries promise, but no specific actions yet.
Fed says vote to lower Fed funds rate was unanimous. That's the news I'm seeing. So, good morning.
They had an emergency meeting?
I think they were having an emergency meeting. Yep, I saw some notes yesterday. So, welcome everybody to March. And we're in the trading room.
Holy crap, we're up 565 on the Dow futures. We were just down 180.
We're watching it live, guys. Are you guys in anything right now? I grabbed a short on the NQs and we captured it out and grabbed a $480 profit here.
Yeah, I was short NQ and YM, but we got out just before we went live here. That's insane.
The spread's just coming down now because everything's going up. Wow, look at that. Let me turn this back off so I can see.
Wow. Yeah, that is crazy. Look at that move. I almost didn't get out. I put in my order to cover my short, and it didn't get filled for like a few seconds because it started moving up, but then it popped back down and got out. Whew.
Look how it hit that support level and coming right back down on the NQ. Same thing with the YM. I love these levels.
Wow. I haven't seen volatility like this since 2008, 2009. We're right back in it, guys. Steven says I almost got in on a long, but missed it. Crazy move. Yeah. I mean, you can put an order in, but it doesn't necessarily mean you're going to get filled, or there's going to be a delay in the filling. So in the confirmation. So just be aware of that too. Back in 2008, it was funny because I had multiple contracts on different instruments on futures, and I thought I closed them all out, and the platform said I closed them all out on TOS. And I got a call like 3 weeks later from TOS, and they said, hey, you still got this open futures position. You want to roll it over? I said, no, I'm flat. And they said, no, you're not.
No, sir, you have a lot of money. What?
Yeah, actually, I was up. I was up like $7,000.
Yeah, because you'd have known if you weren't up because they'd be calling you, hey.
Exactly. Yeah.
Yeah, look at that jump and everything just took off.
Yeah, it could have easily been the other direction, that's for sure. Oh my gosh, look at the gap on that.
Look at the issues jumped up. Look at the volume jumped up. This went from 30 to 70.
Oh, holy crap.
I've never seen that.
That is insane. Yeah, I haven't seen this kind of volatility since 2008, 2009.
Fed says fundamentals remain strong, but coronavirus poses evolving risk due to economic activity. And there signals additional stimulus possible to cushion economy from virus disruptions.
All they have to do is say it.
They just came out with the statement. That's what's doing this.
Yeah, they don't even have to do it. All they have to do is say it.
Wow. So yeah, moves like this. I've heard from so many people that were doing different strategies last week that were down 70, 80% in their accounts. So I hope you guys are being careful out there. I don't want that to be you guys.
Yeah, be very careful. This is the type of thing that can just eat your account up.
Yeah, these jumped the wrong way, and that's $8,000 per contract.
Yeah. I remember back in, I think it was 2004, 2005, I was short nat gas when the numbers came out in the early morning. And in a few seconds, I was up 14,000. The next few seconds, I was down 11,000.
Yeah, that's crude oil for you, right?
20 net natural gas.
Oh, nat gas, that's right. Very simple.
I was a swing of $25,000 in like seconds. It's crazy.
People trade that all the time too. They got nerves of steel.
Oh, well, that was like 2004. I was still in my mid 40s. Now I don't have that kind of tolerance, I guess, for volatility. Give me a nice, safe dividend stock.
Exactly.
I did do a little trading though this morning, but Very, very cautious.
Yeah, had we not been talking, I would have probably grabbed this to the upside when it passed my level here, but I was too
Mm.
busy to grab that.
Yeah, there's opportunities here if you guys are really very, very quick on the button. But although, just remember that even though you press that button to put the order in and it goes to the exchange, it could be even a millisecond difference can change the price dramatically.
Yeah, that's why Steven's mentioning, toss been glitchy. When we have this level of volume and volatility, absolutely, like Dave
Oh
just,
yeah, yeah, they're all going to be glitchy. That's
you
for
send
sure.
it and you're in line. You got thousands and tens of thousands of orders coming through right now.
Yeah, and it's first come, first serve.
Yep. So be careful on if you are trading the full futures contracts, these moves, if they go against you, will definitely hurt.
Yeah, yeah. So this will be interesting. So let's say we're up we're just up 600. Now we're up 397. So starting to pull back a little
Yeah,
bit.
it's already turning around.
Um, and just insane stuff. So it doesn't look like we're doing it. It doesn't look like we certainly do not have a true trend day. We're just going to be volatile all day long, I think.
Right. Yeah, even though that jumped up to almost over 2,000, I would definitely not consider that. We started out choppy here.
Yeah.
We'll definitely have chop.
Interesting. I've been keeping an eye on TLT. TLT had a major sell-off this morning. It was up around 154, and then it dropped down to 152. It was a pretty big drop. So it looks like interest rates are starting to go back up a little bit. That's one thing I've been kind of keeping an eye on is that 10-year dipped below 1% last week, and now it's back above 1%. But I think that's something that we should keep an eye on.
Since we did see a few people trading or looking at the setup for the VA, I'll pull that guy over real quick on the 5-minute just to talk about that, just so you guys see it, and pull over the spreadsheet real quick too. I'll grab the YMNQ here. So we had down bias on the bell curve, or excuse me, up bias because it went down, -4, -2, up bias. First column's filling in, cross columns also coming down. So everybody was in up bias across the spreadsheet. Then looking at the 4-hour, I had funny math in my head this morning, and David L corrected me nicely in the chat room. We were borderline continuation down here with a 16 and a 14 for a -30. But with the entire overnight movement, I was still had an up bias, even though we had a continuation potential, is the way I read that. And we also had a 1-minute uptrend, which led us to a down around the open, which is exactly what played out. Then we had a nice move up, and we actually hit on the 1-minute charts. Since we're watching 1s and 5s, as soon as this hit this 0.3, that's where you're looking at possibly taking profits off the table, because it definitely stalled out at that time. It did come back and grab a little bit more, but in times like this, as I stated yesterday in the chat room, grab your profits earlier than normal if you're in these trades, because you don't know how fast it might reverse, especially with stuff like this.
Yeah, and remember, you're dealing with two different instruments, and if the volatility starts to really pick up, you may not be able to get out of one and the other at the exact same time.
Which is very key for the vol arb strategy, as we all know and remember, but just for a reminder, you want to hit those orders as close to simultaneous as possible.
Yeah.
So that's how the VA played out this morning. Nice little down move, and then the move up was the trade for the day. For those that don't know, those alerts are now being posted in the chat room. So jump in the Slack channel and make use of those guys. And if you don't know where the Slack channel is, just check on the member site. We got the where to join on there. You guys are all in there. We'll just see how far we retrace back down here now. What's the rest of our indicators looking like with that big crazy move? Oh, look at that, bear trap. Or bull trap, excuse me. It's drawn in with 4. I thought it was only a couple. Interesting. Okay.
Yeah, if there's two missing there, it'll
If at
jump
least
in.
two missing, it'll fill it in.
Yeah. Yeah, I don't trust any move higher at this point. I mean, if you look at the daily Dow, um, you don't get a bounce. You don't get a rally starting from the position that it's in. If go to even the weekly is kind of showing it. You get a big down move like that. It's an inside bar, so I would anticipate that we're going to see probably a little bit more of a pullback here if we go higher. I kind of tend to believe that. I mean, look at the difference between the balance of power there. A lot more on the bearish side than the bullish side. So I kind of tend to believe that this is a rebound from the dramatic sell-off last week, and we're going to go lower.
Or the really bad description of the dead cat bounce. I heard someone calling it that yesterday. I was like, I haven't even heard that one in so long. I had to look it up. I'm like, geez, that's a bad description.
That's not this is not a dead cat bounce. Dead cat bounce is just plop, and then it doesn't really. I mean, the bounce is so small. Yeah, I know it's a really bad description, right? It's a bad analogy, but a dead cat does not bounce very high.
Yeah,
So yes. Yeah, so they misused that term. It's not a dead cat bounce because dead cat bounces barely move higher.
It had been so long, I had to look that one up again. I'm like, what?
Yeah.
Good job, Stephen. Yep, I saw you joining the Slack channel there, so welcome.
Yeah, so we're not gonna. It's just incredible to me. The strong rallies, and new highs do not come from these levels. That's all I'm saying.
And I think I saw a tweet by Danielle DiMartino Booth who was saying, "Yeah, you guys like this big up move. This also happened in 2008. That's not indicative of we're going back into a straight bull market. This is just major volatility now."
Yeah, absolutely, 100% agree with that.
And I couldn't believe one trading day sandwiched it from the record loss on the day for gains to the record high after yesterday.
Yeah, you look at the fall of 2008, you had a lot of days like that. We're up 700, down 900, up 600, down 800. Pretty nuts.
Yeah, the spread's really coming back down now. See, now's where the continuation's playing out on the spread after the morning move.
Yeah, so that move on the NQ futures from 87.50 to 9,000, that's a 250 point spread on the NQs intraday so far.
Yeah, 200 points, 8,800 to 9,000, and it just bounced off of 9,000.
Well, no, at the bottom of the day, we were at 87.50.
Oh, so way down here, right?
Yeah, that's an intraday spread already at 250 points. And on the Dow, looks like it was about 580 points, almost 600.
322 to just over 27.
600 points, yeah. And just
in a matter of 5 minutes.
Yeah.
Minutes.
Yeah, wild. Now look at we're coming all the way back down.
Yep.
Somebody, I think I was talking to Andrew the other day, and he was asking me which strategy would work best in this kind of volatility environment. He was looking at bull call spreads and spreads like that. And the only one that I could really think of, you don't want to get into bull call spreads or bear calls or bear put spreads at this point because the volatility is so high that this, unless you want to hold it to expiration, you might do well on a bear call or a bear put spread. But he was asking me about victory spreads. So you still have the victory spread videos on the membership site?
Yep, everything I believe is up there still.
Take a look at that, guys, if you're interested in a strategy that works very well in a high volatility environment. You got to be a little careful getting in and out. You want to try to do it when volatility is a little just coming down a little bit so you can get good prices. But that works tremendously well in high volatility environments. It's good income strategy. Look at the up down volume just went negative now.
Yeah, look at this.
Jeez. Completely wiped out that rally. Now we're negative on the Dow. We were just up 600 points.
Yeah. Complete reversal coming back down. It's going to go lower, I bet.
Insane.
And what were these numbers at? 298 on the pricing, 1,000 on the Dow.
Yeah. Wow. We haven't seen anything like that. Oh, man, long time. Well, I'm just kind of happy to sit on the sidelines and watch.
I was happy to grab that quick profit and be done and then watch that happen.
Yeah, exactly.
Now it's coming down for round 2 maybe, but I'm not well, I'm talking to you guys. At least I try not to. Yeah, look at this. Look at the internals. We were at 37, then we went to over 80. Now we're coming back down to 50.
Wow. I don't think I've ever seen, even in the 2008 crisis, I don't think I've seen anything that bad.
These are, yeah, I was talking to someone the other day. They're like, how do you like trading this market? I'm like, remember these times because this does not happen.
Yeah.
This is so rare.
Yeah, I'm very happy just to be in cash at this point.
Speaking of being in cash and the other wise people out there that are just putting together your list, put together your shopping list, guys. If you ever wanted to own stocks, this is the time to get ready and wait, because as soon as the crazy volatility is over and we start to turn around to go up, it's going to be time to buy those ones that you want to own forever. Nice dividend paying ones, or just in general, you know, you're going to say, I should have bought it at this when that happened.
Yeah, there's going to be some crazy bargains coming. It's not yet, but it's coming though.
Yep.
The other internals look like a spider web. They're just crisscrossing.
Wow. How are you guys doing? You guys grabbing profits? Are you sitting on your hands? You guys on the sidelines? How are you guys doing during this last week or two? Complete reversal coming on the intraday as well. Steven's doing well, some short swings. Good to hear it.
Oh, according to CNBC, the Fed did cut rates a 0.5 point.
Really? I saw they were unanimous, so it must have been what that decision.
Let's see what they say. Jim Cramer's on video here.
How much of yesterday was about this kind of gathering commentary from the IFIs?
Well, I mean, look, I know people did have high expectations starting Sunday.
That's not the announcement. They had it on CNBC though. Stocks are down even after Fed cuts rates by 0.5 point.
Wow.
They don't have it on video though. I thought they did.
Yeah, March unscheduled. Here's the release.
You got it? Put the link in the chat there if you can.
Decided to lower the target range by a 0.5 percentage point to 1 to 1.25.
Wow. Yeah. Yep. Knew that was baked in, especially after the 10-year went under 1%.
Oof. Yeah, released at 10 a.m. Eastern time. There you go. What time did that chart move? was right as we were talking.
Yep.
We know it. There's always volatility around the regular meetings. You get the unscheduled releases, and that's why we get the increased changes. Interesting how it's coming all the way back down, and they don't like it still with the price cuts. A lot of times they keep going up on that. You know, it's one of those, how much power do they still have? Even though they manipulate the, you know, is it too late? Is it not enough?
Well, you know, they don't really have a lot of room left to do anything. I mean, if this is just the beginning of a larger decline that's coming, and we're only a few thousand points off the all-time high. What are they going to do when we drop another 5,000-6,000 points? You know, if that happens, they got 1%. They can make 2 more 0.5% cut rates. Now, everybody was telling Powell, I guess, or everybody was suggesting that Powell should take an early lead in cutting, and it looks like he did. And he
I thought you were going to say an early retirement.
Yeah, I guess so.
Yeah, looking at that weekly chart, there's one thing that I noticed too is, yeah, we took the huge drop down to 25. We could easily be down at 22 again.
Yeah, see, I think so. And so if that happens, then they've got like nothing left to work with. They'd have to go negative almost, you know, or very, very close to negative. What would happen, and I put this out on Twitter, what would happen if the world reserve currency, US dollar, had negative rates? Now, we are already negative in nominal, in real terms, because we have inflation at 1 3/4%, and you know, short-term interest rates are now at 1%. So we've already got a negative real interest rate. But nominally, what if they went negative? In 80% of the world debt is, you know, denominated in USD.
Yeah, I don't know if it would work. The more you think about that, it's like it's one thing for other countries to go negative, but you
Yeah,
make the world reserve negative.
yeah,
I don't know if that's not just going to fall apart.
yeah. That worries me. That's something that's like a really unknown. I don't think anybody really knows what the impact of that would be, but it doesn't seem good.
Wouldn't you think the only way that the U.S. would technically get away with it is if we were no longer the world reserve?
Ah, there you go. Nice. Yeah, I think that's the way to think about it. That, you know, if they went negative, would they take the status? I mean, of the USD away, the status of the being the world reserve currency. Who would you know, which currency would it be then? I mean, nobody's positive. Nobody's has positive rates anymore. Japan's negative. Most of Europe is negative. UK is, I don't know, is the UK negative? Not sure.
Yeah, you think, you know,
Costa Rica?
maybe something new that the IMF comes up with.
Yeah, maybe. It could be something cryptocurrency like.
And weren't they having emergency meetings about that yesterday too?
Yeah, Mnuchin met with cryptocurrency leaders. They said no details.
Yeah, where's that press release?
Yeah.
So that's, you know, you just start thinking about the math to it, right? And the fundamentals. Not even trying to be tinfoil hat. It's like, you can't just make everybody negative.
Right. Right.
Because the math doesn't work.
No, it doesn't. You know, and you got this whole reset going on with LIBOR. LIBOR is not going to, you know, set interest rates anymore, and it's not going to be the benchmark. And so you have this new benchmark in the United States called what's the name of it? Senior something, or Sanoa?
Oh yes, I know what you're. Yep.
Or something. I forgot the acronym they use, but it's a blend of the repo market rates, which is kind of interesting because those can be really volatile too. So yeah, I don't know. That's a really good question. If the U.S. reserve currency goes into negative interest rate territory, do they take it away and they create something else? Maybe an SDR or an ESDR that includes a basket. See, the one thing about cryptocurrencies, especially XRP, XLM, and a few others, maybe ETH, is there's no counterparty risk. Bitcoin, well, not ETH, because ETH has miners just like Bitcoin does. So those are counterparties to the transactions. But XRP, XLM don't have that. There's no counterparty risk for those. And so they are independent assets, digital assets that could be used to collateralize other debt. One of the things I thought about recently, I don't know if you saw, did you see that Jeff Snyder interview with George Gammon?
No, I have not watched that one.
Oh, that's good.
I don't think so. I watched the other one that he just did about the COVID yesterday, and
Oh, yeah.
go on sale. That one I watched. I haven't seen the other one yet, though.
Yeah, this one is really, really good. I'll put a link in here. I think everybody should go watch it. He talks. Jeff Snyder is with Macro Voices. He's with Alhambra Partners. It really, really sharp guy. Gave me a lot of insights into how the Fed operates. And basically, he said that the Fed, which we know can only influence short-term rates, but even their rate cuts have absolutely no implications for the purchase agreement market itself, because that's an interbank lending market, which we knew, but I didn't really make the connection. I thought they were actually involved, but they're not. They're only involved through primary dealers. And so it is something really interesting. Let me see if I can find this. I know it's in here someplace. I could just go to George Gammon's. Boy, I watch a lot of YouTube videos. Here it is. No, that's not it. So one of the things he was talking about is the fact that one of the reasons why the interbank market didn't work that well last September, when because banks started stepping away from the market, they would not accept the collateral from other banks. And so there's a lack of prime collateral, real good, high quality collateral. And so the thought just kind of popped out to me that maybe a asset that didn't have any counterparty risk like XRP could be used as prime collateral for the interbank market.
Interesting. I will definitely have to check that one out.
Here it is here. Very, very interesting talk. I'm going to try to listen to everything I can by this guy, Jeff Snyder. He's really dialed into the Fed. There we go.
Perfect. Thank you. Up and down roller coaster.
I highly recommend everybody watch it. So where are we at in the market? Just floating around here?
Yeah, we had a little drop and a little recovery. Now it's just kind of 265 up on the contracts. Where's the indexes at?
I lost audio on you.
You lost my audio. Can you hear me now?
I can't hear you. I can see you, but I can't hear you. Can you hear me?
I can hear you. Can you guys hear me at all?
Maybe it's me.
Andre, Sean, Mark, can you guys hear me or no? Steven can hear me. Okay. So it's just Dave.
Mark says he can hear both of us, but I can't hear you. I can't hear Dan. don't know if Dan can hear me. That's weird. Let's see. Select the microphone. I got my microphone on.
I have to get my sign language in. Or let's just make fun of Dave now.
How's that?
I can still hear you. You got me yet?
I'm going to get out and I'll jump back in.
Okay.
I think it's when I hit that.
Oh, probably when you got the link. Dave will be back. All right, let's tell jokes about Dave. How he's technically challenged in his elder years. Let's not make fun of him that bad. All right. So yeah, if you guys are curious, these gold lines, these are the ones that I'm setting in the mornings off of where I want to trade off of. Then I have my profit targets below them and above them. And he's coming back, so that's how I'm using those gold lines. I did them both on the ES and the NQ. So the ES, I didn't hit either before us. The NQ I did get in prior. And we'll see. I'll pull up the active trader quick. I just did 2 contracts. And I grabbed 480 in profit just before the trading room actually opened up. So shorted it once it went below, grabbed one on the way down, closed out the second one before 9 a.m. there. So that's what, in case you guys are wondering what those gold lines are, that's what that is. Can you hear me now, Dave? Oh, he left again. Oh, wait, let's unmute Dave.
Yes, I can hear you now.
All right, I got you too. How do I set the gold lines, Andrea? I look at pre-market volume is how I do that. So I'll go back, and I do this early in the morning actually. So I look at where the highest volume is, and I make some decisions on above and below those points is how I set the lines. And then I set my profit targets either on major levels and or if we're reaching the pivot points. I'll grab profits if it's coming towards one of them, like the support line from the Camarilla. If I was trading up here, I would definitely be getting out before that, is how I set the profits. So I set the lines based on pre-market volume, and I set targets based on pivot points for persons or Camarilla, or both. Sometimes they line up together. The red line up here, that is a Camarilla point, C-A-M. I'll show you, there's 2 versions that I have in here. One was a custom one, which I think they only changed one thing, so it's not actually technically custom. So let me open up the studies, I'll show you. Edit studies. The one I have loaded is called Pivot Boss Camarilla, but it's the exact same thing as the built-in toss one called Camarilla Points, I believe they call it. Scrolling down, there it is right here. So the only difference from this one is they have it set to 1 in the length, so just 1 day. I think the default is like 25 when you look at the Camarilla points. We'll double click that guy and bring it over. Yeah, so it's just 25. That's the only difference in both the scripts. Even though this one's custom, all it is it's a 1. So you won't have this one in your systems, but you'll have this one, and you can use this, and you can just adjust the 25 to a 1. And you'll get the exact, that's where the thin red line comes from. And by default, inside of these, if I pull up the gear, the R1, R2, S1, S2 does not plot by default. So if you want to turn those on, you can. And I do some testing, but the major ones are R3, 4, and 5. I believe this one might have them all on. I forget. I'm doing a little bit of testing on both sides just to see how they do play out. But the default settings, R2 through S2, are not set to show. So you just come in and click this to show the plot on those guys. Then you can change the colors whatever you want. The R's are red for resistance, and the supports are green, obviously. And then the 5th one out is a blue. I believe, by default. I might have adjusted that one. But that's what those guys are. So that's how you spell that one, and then I'll make it go away. Hope that helps. Yeah, it's kind of hard to not pay attention to those when you see something like that. Especially on a move like that. You know, we're talking 250 points that we were just talking about, and it hit that and reversed. Do you think there's not a few computers to sell at these levels? You're welcome, Andre. Happy to help. Dave's like, you quit talking about your pivot points already.
I know you like them.
Did you put them on your charts yet?
I did.
Nice.
I only got 2 levels, though. I didn't get the other levels. You said they were hidden now, right?
Well, which ones are you talking about?
The Camilla points, rather.
Yeah, it was just the one on the NQ that it hit.
Okay.
Same thing for ES, just the one line right there.
Yep.
And if you look at the Russell, that also touched it.
It's Camarillo, right? So it's like C-A-M.
Yep, exactly. Camarilla.
Something like that. Yeah, I don't know how to spell it, but it starts with a C, C-A-M something. Yeah, there you go.
There you go. So it's a nice tool to use to know what may happen or where to get out. I use them for exits. Or if you're using them for entries, you want to make sure you're not close to one. So if I'm looking at my volume pre-market and it comes out, it's like right around the person pivot itself, I wouldn't wait. You know, I'd wait to the other side. I'd set like a long on this side of it, and I'd set a short on this side of it. That's how I put those together. Because you don't want to enter where everything else is programmed to start buying there, and it goes against you.
Lots of volume coming in. Look at the gray line on the internals. Lots of volume on the upside. The gray line is the up volume.
Yeah, these are catching up, but yeah.
Issues are starting to catch up with them, yeah.
We're going positive again.
Wow. It's interesting. I saw a graph of institutional managers' inflows and outflows, and they were basically dumping last week. And now what are they? I mean, it's just hard to believe that they're jumping back in now.
Yeah. For how long is the question?
I mean, they're worse than retail investors.
Didn't miss anything. Nope, nope, nope. All right. Well, happy March. Any questions before we get close to wrapping? We'll probably be done in about 5 minutes or so.
Beware the Ides of March.
Yeah, it came in like a lamb, so watch out. It's going to go out like a lion. Our quick weather report. We're talking 50s and 60s for the weekend here, so it's been a pretty mellow winter.
Yeah, it has. A couple of weird storms, but nothing major. I'm kind of hoping this is going to be my last winter in New York, though.
It gets cold, man.
Snowy, icy.
Every winter I say, why do we live here?
I know. You could move. You could really be anywhere, right? But you have family up there? You have a lot of family where you are?
Yeah, there's a bunch here. Yeah, I could see South Carolina's pretty decent down there. I like North Carolina, too.
Yeah, I like North Carolina a lot. South Carolina, Charleston, oh, wow. It gets hot in the summer. And it's burning hot and humid.
I was going to say, yeah, they're sticky over there, too.
I'm not sure if I could take that either.
I
I need someplace like Santa Barbara.
or San Diego or Texas or
San Diego, yeah. I mean, they had Santa Barbara supposedly has the very best weather in the country. It stays like between 65 and 75 all year round.
then if you want to get different weather, you just travel.
Yeah, and the real estate there is as expensive as Monte Carlo.
Wow.
Yeah, I was looking at 1-bedroom apartments that were going for like $2.5 million. Steven says, nice here in South Carolina. From Detroit originally, wouldn't go back. I don't blame you there.
You're not going back to 8 Mile?
South Carolina's cheap? Wow, cool. And taxes too, huh? God, I'm paying so much in taxes in New York. It's driving me nuts. That's another thing too. It's not just the weather, it's the taxes.
Right. That's why the 3 states that I look at is Florida, Texas, and South Dakota. South Dakota is just as cold, so I have to go to Texas or Florida.
$1,500 a year, that's a bargain. I'm in an old industrial town in upstate New York, and I'm paying on our property about $5,000 a year.
Yeah, 1,500 a year. That's ridiculous. That's like a quarter.
Yeah.
We envy you, Stephen.
Did you move there for job reasons, employment, career, or just a conscious decision to get out of Detroit?
He's building houses. There you go.
Yeah. Oh, nice. Oh, good. Good for you. If I come down there, will you build me a house?
There you go. Custom design. That's what we need.
Awesome.
You know what I've been looking for, Stephen, around here? So none of the builders build like a regular house anymore. Everything's in my area, 3, 4, 5, 600,000. You can't buy like a starter home anymore that's new. It's like I wanted just a plain house that's not 8,000 square feet. Builders don't do that anymore because it doesn't pay, right? Or do you guys do anything like that down there? Nope. See, I want no more steps because I'm thinking about getting older.
Yeah, I'm thinking we've got we've got a full basement, we got a first floor, second floor, and a third floor, which is a renovated attic. But yeah, it's too many stairs. Too many stairs for me.
Playing forward, playing for the Rambler.
My ideal house that I'd love to build is kind of almost like a ranch style, all one floor with a courtyard in the middle.
And a huge wraparound deck around the whole thing.
Yeah, and a wraparound deck on the outside and a courtyard in the middle. That would be awesome.
There you go.
Most homes are basic spec, not any custom builders like us. Oh, you do custom, nice. Yeah.
Yeah, that's what I figured. You'd have to just do something one-off, but you get what you pay for too, so we'll see. Build me a nice house in Texas or Florida and retire there and just trade.
Have you been to Florida much?
No, not recently. Not outside of, trips for conferences, Orlando here and there.
Yeah, I was in Orlando a few years ago.
Panhandle. I've never been to that area other than driving through it.
Yeah, Florida is great in the winter. I just love it there, but summers are kind of tough to take.
Yeah, it's those targets for the hurricanes too. That's not so fun.
Yeah. Yeah, just about anything on the East Coast, you're going to either get hurricanes or you're going to get very hot weather in the South. I don't know why California has to steal all of the good weather. Hendersonville. Oh yeah, I think they make a lot of furniture in Hendersonville, huh? That's what I heard. They got a big factory down there. Hickory. Yeah, that's it. Hickory. Yep. And the weather's good there in Hendersonville, in that area. It must be really hot and humid during the summer, though. I remember going to Kentucky, which is not even that south, down in Louisville. And that was hot in the summers. Oh my gosh. Well, 4 seasons though. That's good. I like the 4 seasons. When I was in my 20s, I spent a summer and most of the fall in Belen, New Mexico, which is just south of Albuquerque. There was no change of seasons at all. And I didn't like it. I said, wait a minute, something's wrong. My internal clock was like, yeah, where's the fall? Because I love fall. The mountains are not so bad. Okay.
Oh, Trump's tweeting now.
Oh, jeez.
The Federal Reserve is cutting, but must further ease and more come into line with the other countries and competitors.
Are you kidding me?
Level field. Oh, we are not playing on a level field, he says. Not fair to the USA. It is finally time for the Federal Reserve to lead, more easing and cutting.
He really wants to go negative.
Wow.
I mean, I understand that yeah, the other countries are probably beating our behinds on the exports, but still, I mean, how low can we go?
Right.
And how do you get out of it? See, it's not just going low.
Yeah.
How do you get out of it? Huh?
You can't just stay there forever.
No, and Japan has. I mean, Japan started on that route 20 plus years ago, and they're still there. They can't get out.
And they never probably will, right?
Yeah. So, I mean, the Fed does not set interest rates. The market does. And so even though they cut, it really doesn't mean anything. If you listen to that Jeff Snyder interview, which I highly recommend everybody do, they're an expectation policymaker. And so their expectation is that interest rates in the market are going to go down. So they have to follow suit. So they have to kind of target that rates.
Sure.
And, with the 10% going on 10-year going under 1%, the market is telling them interest rates are going lower. It does help out it does help out the primary dealers that are holding all of the debt assets and the Federal Reserve holding the debt assets, because lower interest rates means that the price of the bonds are going higher. It kind of helps them out a little bit. But, remember that the Fed is a private corporation.
Mm-hmm.
So, we're basically helping out a private corporation.
Right.
And we're also looking to them as some sort of savior.
Yeah, that's not supposed to have any direct contact with any part of the government.
Yeah.
It isn't supposed to control it.
Exactly. And so you get, I was reading one of the Fed Now documents. I'll see if I can put this. No, I don't think I can. I can't put images in the, no, I can't do that. Anyway, down at the bottom of this Federal Reserve document, it says financial services logo, Fed Now, and Fed Line are service marks of the Federal Reserve banks. Well, if it's a government agency, they can't service mark or trademark or copyright any of that stuff because it belongs to the people. It belongs to the U.S. government. It belongs to the people in the country. So you never see a copyright on reports that are written by staff of government agencies. And you can use them and you can republish them as you will, because we own it. But the Federal Reserve is service marks their stuff, which is how you know that they are in fact a corporation, not a government agency. Now the government can hire outside contractors to write reports and stuff like that, and they do copyright those. But if it's paid with federal funds and federal employees write them, then you can't. Just a little bit of tidbit. copyright law. Yeah, we're just chopping here. I wouldn't be surprised to see us go back up to the highs and then bam, get crushed at the end of the day.
Yeah, look at them just going all sideways now up here.
Yeah.
With the new one coming out, where yeah, as long as this thing hangs around the 0 line, we're absolutely going to be choppy.
Yeah.
That's just ridiculous, though.
Yeah, look at see the dots there? The green is the issues and the gray is the volume, I believe, or the other way around, but I'm not sure. But when they're separated like that, that just means big chop. When they start to come together, then look for a reversal of some sort. So if they come together and it's running higher, wait for a reversal to go down.
All right, gentlemen and ladies that are listening, thanks for joining us on. We'll be back on Thursday and shoot any questions over you got. Appreciate you guys joining us. Happy to see you.
See you guys. Have a great day.
Thanks for your time.
Stay safe.
Exactly. Be careful out there.
Yeah, enjoy the good weather until the end of March. So we're going to get hit with a storm by the end of March, right? In like a lamb, out like a lion.
Exactly. Out like a lion. We got a storm coming in a couple of weeks.
Damn. I thought we were going to avoid that this year, but you're probably right. You are right.
All right,
guys.
See ya, Andre.
Have a great one. Take care.